To the markets, and one of the big winners at this hour, that would be Tesla. CEO Elon Musk and shareholders and the EV maker stock. Big winners here, up 3% at the moment. It's in the top three of both the S&P and the NASDAQ. Musk disclosed in a regulatory filing today that he bought 2.5 million shares of Tesla, totaling around $1 billion. The stock's been on quite a tear over the past 6 months. It's gone from something like $224 6 months ago to $408 and change today. That's a 63% pop. It is Musk's first purchase of the stock on the open market since February of 2020 and could signal his commitment to growing the company as it delves beyond electric vehicles to humanoid robots. Tesla, joined by ASML, Alphabet, Intel on the NASDAQ leaderboard, pushing the index to what could be its sixth record close in a row. With the Fed decision, though, around the corner, let's get right to the floor show, because things could start to happen after we get the answer. Joining me live, ProShares global investment strategist Simeon Hyman. Well, yeah, the big day will be Wednesday when the Federal Reserve announces whether it has cut. What are you guessing? 25 basis points, 50 basis points? 25
is a good guess, but 50 is not out of the realm. The way we think about it, a good 2, maybe 3 25 basis point cuts are almost free. And what I simply mean by that is that only takes the Fed to neutral, because at 3% inflation, we're not down to 2 yet, we're at 3. You could get to 3 3/4, 4% on Fed funds and not run the risk of stoking higher, longer-term inflation expectations. What do you make of now some of the big money center banks, the J.P. Morgans and the Morgan Stanleys of the world, warning that, okay, once you get your candy, your rate cut, if it does happen on Wednesday, you guys are all going to go back to tittering and worrying about a slowing economy or what happens next, and that could derail or at least stumble the bulls a bit on this pretty decent record run? So part of this has to do with the shape of the yield curve, because that 4% yield that we now have in a 10-year Treasury really prices in the landing all the way to 2% inflation. So in other words, when the Fed cuts, don't expect much of a rally on the long end of the curve, and that's what drives PE multiples. So we'll be left with only earnings to drive stock prices. And when you talk about the yield curve, you're talking about between the 2 and the 10. So we're back to looking at that. And what does it specifically tell you? I just want our investors to know how somebody like you thinks. What it tells us, think about it this way. Let's say the Fed gets to its 2% target. You can expect a 3% Fed funds rate, a 3% 2-year, and a 4% 10-year, but we're not there. We're at 3%, so that suggests a 4% Fed funds rate and higher than 4 on the 10-year. That's why we see lowering money market rates, but perhaps even a little bit of a sell-off on the longer end of the curve. You just look at this 1-month chart of the 2-year, and boy, has that come down pretty significantly. And same with the 10-year yield. It's just fascinating to see these yields move ahead of any rate cut by the Fed. That said, best places to invest as you look at the ProShares landscape. There might not be much of a benefit to large cap stocks from the rate cut, from a Fed cut, but there ought to be for small caps, because they're more highly leveraged and they have shorter term maturities. So even if the long end doesn't move, we see an opportunity in our ETF I2, ITWO. That's our ProShares Russell 2000 high income ETF. Very cool way to use daily options to execute a covered call strategy and get some income from those small caps, not subject to interest rate risk. I need you to dig into that and explain how the income comes, because not a lot of Russell 2000 stocks pay dividends. Where's the income coming from? That's exactly right. So we're writing calls on the ownership of the Russell 2000, generating income from the premium. But we're doing that with a daily option strategy. So in the old school way, you would write these options, you would sell them once a month, say. And you could get called away at the beginning of the month and not participate in the equity rally. And people have learned that, particularly in this recent rally. But with I2, now they're daily options on the major indices. You can sell those calls every day, get premiums. We're running double-digit income in the strategy and delivering the performance of the Russell 2000. Well, that's really interesting. And for people who don't want to play the options game because it might be a little bit confusing, I mean, over 3 months, we've got an 8.6% gain for I2. That almost feels like you're doing the work. We are doing the work. It's all, and it's not me. These are rules-based index strategies, so they're set in stone and they do what they're supposed to do by rule.
Okay, we are watching it all. Good to see you, Simeon. Thank you so much.